Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 13th of January. Starting off with the FTSE 100, which did what we didn't want it to do, which was follow through on the downside on, to start the week. We had a very negative candle on Friday, closing at the low, and obviously there's been follow through as there normally is in such situations. There is some fig leaf support around 8200, which is the 50-day line. In fact, both the 50 and 200-day lines are rising, so ideally we don't go any lower than them. And then we go into a golden cross later in the month. Below 8200, I suppose, then all we have is the 8100 level, which is the floor of that rising trend channel from September 2023. On the upside, we need at least an end-of-day close above 8240 to give us a chance of a move up to 8400. But obviously, given the lay of the land at the moment, that doesn't seem too likely. RSI also fallen just below the neutral 50 level. Moving on to the DAX, and here it was a mixed end to the week last week, and all we've done so far is double topped with the December resistance. That means we're probably looking towards the 50-day line there at 19,700, and even as low as the floor of that rising trend channel from September 2023, 19,600. But maybe better not to get too negative here, just because the RSI is still above neutral 50, albeit only just. Looked at the Dow yesterday, but have another look today, and here you can see it's fallen out of its rising trend channel, the one in place since April. That leaves us hoping that November support there at 41,600 will hold, but we are cognizant of the risk of a move down to the 200-day moving average at 40,900, and maybe that's the best thing to happen, given that we haven't been touching that particular feature since back in November 2023, a whole year above the 200-day line is what we were delivered in 2024. At this stage, only back above the broken uptrend line there, 42,500, gives us the chance of a move up to the still rising 50-day moving average at 43,400. Moving along to Bitcoin, and here the rug was obviously pulled with the push, that bull trap through 100,000, and also through the 50-day line, now falling at 97,300. The risk now is that while we're below that uptrend line, the red one there from November at 92,000, in fact more accurately 93,000, we could test 85,000, which was support on the way up back in November. The other negative at the moment, apart from that broken line, is the way that we've had an RSI failure below neutral 50. That tends to be a leading indicator on the downside, as is so far the key reversal to the downside that we've had versus the weekend price action. Next up is gold, and here we see that this market has what's basically resting against the resistance line there from the beginning of November. That's 2720. Above that, we're probably hoping now for not only 2750, which was November-December resistance, but an attempt on assaulting the top of that rising trend channel from back in April last year at 2,900 plus. Obviously, that's a bit of a punchy call at this stage, but looking at the lay of the land and the way that we've had an RSI 50 rebound above 2720 could give us a little more than the 2750-60 that would be the obvious target. Moving along to a market which is the market at the moment, really, pound dollar, and falling like a stone, which is great if you don't like the current Labour policies. It looks as though not many other people like it, not many people around the world like it either, but we broke that uptrend line there from October 23, and that was done a few times, but the last failure there at 126.10, and below that the implication was that we could head down to the floor of that falling trend channel from the end of 2020 as low as $1.18. That seems doable, especially while we're below the initial January support there at 123.50, so below 123.50, looking for 118. But obviously, if we are in as bad a situation as we were during the mini budget time, when this market went down to basically the 104 level, then there could be much more on the downside than just $1.18. But the downside in force there while we are below 123.50. The other point to note is that we've had multiple failures at RSI 50. The first one and the best one really was the double failure there at the beginning of November at $1.30. Another trading point there was 128 at the middle of last month. And obviously, we've had a couple of failures below RSI 50 since then. So, all working out quite technically there. Moving on to the stocks and starting on with Avacta, which has got a new CFO. And here you can see that after multiple times of bouncing near the 40p zone, we're having another go at bouncing above it. The good news is that the 200-day line is starting to rise, and we're pretty close to the 50-day line rising. So that would give us a rather surprising golden cross scenario. Still a bit early on that, but at least the upside at the moment, the recent resistance line there at 57p, while we're above the 50-day line at 48, that resistance line there from July. The other point to note is that it looks as though we're bouncing again with the RSI above neutral 50. That gave us the first rally from 48 to around 60 at the turn of the year. Moving on to a stock which I cover and nobody else seems to be looking at, which is Argentex, and here we've managed to hit our second target there quite nicely. They're at 38p, end of day close above 38, and we're looking for a fresh target there, which is a May resistance line projection up to 45p by the end of this month. Upside valid while we hold above the latest gap. Well, it's a third gap actually at 36p on an end of day close basis. Onto a stock where somebody who's very keen on the company keeps asking whether I'm going to interview it anytime soon. And what's interesting here with Atlas Metals is that we've got just the start of a base building scenario here. Rising trend channel base. Unfortunately, at the moment, the top of the channel there only at 15.75p. But I suppose given that we're at 12 now, 15.75 would be very nice as an initial target or initial recovery target. The main issue, though, is how to fill that gap there up to 26, 27p, which currently feels like it's a long way away. Moving on to Bay Capital, a company which I previously hadn't heard of, but we had a vertical move to the upside last month, and we've come back for a pause, but we bounced basically around the old June resistance on the way down at 6.5p above that, looking for a retest of 10p plus by the end of this month. Moving along to another situation which I've covered quite a lot in the recent past, which is Challenger. I've seen some big numbers in terms of what the company's worth, but at least in the near term, we've got 10.5p as the initial target, hopefully over the next few days, and up to 14p, which is basically retesting that March spike from last year. Ideally, we stay above the 8 to 8.5 area, which is the gap area from today. The other point to note is both the 50 and 200-day lines are rising. That suggests we're in the run-up to Golden Cross, which should be enough to give us that move to 14p. On to Distil, which don't cover very often, but here it seems to be trying to break out of its negative pattern. The only thing missing at the moment, or the first thing missing, is an end-of-day close above 0.13, which is that resistance line there from October. Then perhaps we can start talking about a move through 0.2p. The other point to note there is the way that we've got an uptrend line in the RSI window. So if you are somebody who likes to jump the gun on a potential move, this would be the point at which to do so. Moving along to a stock which is back after a bit of a gap, and that's Inspired Energy. Here you can see that we've got great progress after the Bear Trap Island reversal. A perfect setup there, gapping down in October and gapping up in December. And I suppose any entry point under 45p would have been great. Initial target up to 57p, best case scenario target maybe by the end of next month up to 77p, although of course it's difficult to work out what might do that for the shares. On to Jubilee Metals, which keeps delivering rather bearish RNSs, although today's South Africa update, or part of the update, was rather better than we've had in a while. We've broken out of that falling wedge there from back in September at 3.6p above that, looking to fill the gap up towards 4.7p by the end of this month, RNSs permitting. On to Mast, and here this also seems to be delivering the goods in terms of recovery. We've already had this rising trend channel base in place for months. Top of the channel there at 0.24. We're looking for that now by the end of this month after the gap through the 200-day line at 0.18. We haven't had the shares above the 200-day line since November 2023, so it does look as though something positive is happening there. On to the Mission Group, which I saw somebody write up and gush about, but here, from a technical perspective, we've already had the big positive, which was an unfilled gap to the upside at the start of the month. That followed a gap down, so in theory it's a bear trap island reversal, and the initial target here up to 33 pence, best case up to 43 pence by the end of next month. That would also fill the October gap down from 2023. Ideally, we stay on the right side of 25 pence, the floor of the gap. Moving on to the stock which I hadn't really heard of before either, but New Frontier Minerals, and here gapping up and continuing its move. We've got a rising trend channel base there from back in the beginning of 2023. That's heading for 1.4 pence. Looking for that perhaps as soon as the end of next month, while we're above 0.8 pence on a mid-close basis. Stock which where all the glory should be reserved for the coverage that's been delivered here. The shares technical buy here from below 0.5 pence, and obviously now we're 10x on that, and we could still get a little bit more. 6.5 pence, the top of the rising trend channel there from September, and we're looking for that while we remain above 4 pence, which is basically today's support. So 10 out of 10 on the upside there. On to the last two. First one is, well, last three actually. First one is Trellus, and here you can see broadening triangle, top of the triangle there at 0.8, let's call it, and we're looking for that by the end of this month while we remain above the 50-day line at 0.62. Very strong candles over the last two sessions, opening at the low, closing at the high, so that should do the business for Trellus. Finishing off with Zenith, and here you can see that despite the fundraise that we had, the shares are actually up on the day. I think the fundraise just below 5 pence, so that is a very strong signal. Above 6 pence, we were looking for 9.5 pence, and now the fundraise is out of the way. We should be hoping for that, hopefully as soon as the end of next month. We're really lucky by the end of this month. This stage only back below recent support at 5 pence. Really delaying the upside scenario. We've already had the golden cross in there, and very strong candles. We've only 2 negative candles since the beginning of November, and actually only 3 since the beginning of October, so it doesn't really get much better than that. You'll never see that, or you won't see that very often at all. That's it for me today. More updates tomorrow.